Hello and welcome to Python for Finance 3, this series on using Python for to create various financial tools. Okay, thank you for joining me. Before we get going, can I please remind you to like and subscribe to the video so that you get notification of new videos as they're released in the series. Okay, so in the last video we looked very briefly at backtesting, a very simple strategy using the BT package. And what I want to look at in this particular video is some of the indicators that you can use, some of the technical indicators, common technical indicators that people that are trading generally use, and how to calculate them in Python. We're going to use the TA-Lib package, which stands for Technical Analysis Library, and it includes 150 indicators as well as some candlestick patterns. And this is one of the things that I actually really like about creating the tools that you want in Python for yourself, because you can pay quite a lot of money for stock screeners, and a lot of them will look up things like, is the stock above a moving average, or if it's it will give you the ability to search on a technical indicator. It will give you the ability to search for various fundamental analysis things like PE ratios and stuff. But I've not really come across one that enables you, or put it this way, not come across one that I can afford to subscribe to that would allow you to look for a particular candlestick value as well as a technical indicator, as well as your particular take on what makes a value stock, for example. So that's one of the reasons why I'm doing this course, because this is what I've learned in creating my own tools. And as I say, I haven't got lots of money, but I do just trade pound stocks on Trading 212, and it's a interesting thing to do to see how your strategies work out in real life. Anyway, so let's move on with what we can see in front of us. So going to the first cell of code here, right, we're going to import TA-Lib, and we're going to import the matplotlib so that we can see and visualize what our indicators are looking like, which is quite useful. Now, it's also useful to know that you can actually get the functions for the TA-Lib. So using this .get functions, if I press enter, you can see there that we've got a list of various different types of functions there. And there's also, what I'm going to do is I'm going to comment that one out. I'm just going to clear this. All right, so I've right-clicked, clear output cell. And you can see, if I press this, we've got the indicators group. So you've got things like cycle indicators there, so indicators that would go through cycles. You've got overlap studies where some indicators fit in more than one particular group, basically. You've got things like pattern recognition. So that can be of interest if you want to look at what's available. I'm going to clear that cell again though, so that it's not in our way. So for this project, for this file that we're working on here, we're going to go back to using the yfinance to get the data. So I'm importing the yfinance package in this cell. I could have had it up the top there, but I've just done it here, and we're using Apple again. And I'm going to get rid of that tile so that we print both, because I think that's quite nice to see. Okay, so we've got the Apple data in, and it's worth looking at this, and I'm going to do this. So I want to see what the index is. So if we look at this, we can see that the index is this timestamp. Okay, so that's going to be useful to know as we move on, and I'll explain that as we get there. So let's use the TA library to create some moving average indicators. So just noticed a typo there. Let's just correct that. the general format is going to be TA-Lib dot and then the function and then the price series as argument, and also the period when appropriate. Okay, so what I'm doing here is I'm creating a new column in my data frame with the heading EMA 20, and then you can see here I've got the TA-Lib dot, there's my function EMA with my arguments, which is the close price and the time period of 20, because it's a 20 period EMA. I've then repeated that down here, so this time I've got EMA 200, so the beginning bit is the same, but what's changed is I've got time period of 200, and I've also, just for comparison, got the simple moving average versions down here, again 20 and 200, again 20 and 200. Okay, so this time I'm going to leave that as tail. When I press shift and return, what you can see above here is, so this is wrapped around, but what we've got here is the same date, okay, but we've got the close price, the volume there, and then here's our EMA 20, here's our EMA 200, SMA 20 and SMA 200. So we've got these added columns, okay, and once again we can plot these. So in this particular instance I'm plotting the EMA 20 and the EMA 200 against the close price. Got the title EMAs, press return, and you can see down here we've got a nice little chart showing us how the close price has varied against the EMA 200, and in blue the EMA 20. You can, if you want to, do things like comparing the simple moving average with the exponential moving average. So again, we can easily plot a chart, hold shift, press return, and we can see how they vary. So we can see here that the EMA 20 tends to put more emphasis on the latest prices. So we've got prices going down there. The EMA 200, did I say the EMA 20 before? The EMA essentially reacts a little bit quicker than what the SMA does. The SMA doesn't put any emphasis on the latest prices, where the exponential moving average does. And it's interesting to see a graph like that explaining it. Okay, so what else are we going to need to do? Well, just excuse me while I clear my throat for a minute. To look at the latest value of something. So you might want to know, well, okay, is my stock price above the EMA 200? So in order to do that, we're going to need to get the latest value for the EMA 200. So up above, we looked at what the index was, and the index is this date time index here. And so what we need to do is to get the latest value of the index. That's the first step. Okay, so what we've got here, if I print, that's the latest value, all right, because yes, today's the 3rd, so the latest value of data, of complete data, is the 2nd. And once we've got that, we can use, we can basically get the latest value of an indicator or the close price via two different methods. We can either use the at or we can use the lock. So what we've got here is the ticker prices, so that's the data frame, at, and then we've got the index value, and we want the value for close. Okay, sorry, Grammarly popped up again there. So if we press return there, we've got 212.44. So that's just, we can look, if we go back up to our data, and where's close? 212.44. So you can see here, that's the latest date, and that's the latest value of the close price. So as I say, two ways of doing it. We can use the at, or we can use the lock. And just going to press shift and return to do that, and show you that the two things are the same. So we can also use the same method to get any of the indicators that we've calculated. So here you go, I'm finding the SMA 200. which it's saying is 222.7. So if we go up and we look at the data, and sorry, brain fog kicking in here. Do apologise, I've got long COVID and sometimes I forget things. Right, so we were looking at the SMA 200, okay, and it's 222.7. So the SMA 200, when we go up here, the SMA 200 on the latest date, 222.7. Okay, so that's the value that we've got there. So we can then base strategies around saying things like, as I've said here, we can look for triggers like the golden cross, where a short-term moving average crosses over a major long-term moving average. So we could be getting the latest value of the SMA 200, the latest value of the SMA 20, and we might have a strategy that says, okay, well, if the SMA 20 has dipped below or has gone above the SMA 200, we'll buy because it's a positive move upwards. Okay. Again, I would like to say, disclaimer, this is not financial advice. I'm not suggesting you actually put money on this. I'm just explaining the programming that you would do. So let's move on to a slightly more difficult technical indicator. Okay. And this is one of the reasons why it's useful to get your price data using the Y Finance package, because some of the indicators need more than just close price. So let's look at the ADX. This was one of the first technical indicators that I played around with. I'm not sure why it came onto my radar, but it did. And the ADX is the Average Directional Movement Index. And it's built from two components. There's a DI plus and a DI minus. And it measures the strength of the DI plus measures the strength of an upward price movement, while the DI minus measures the strength of the downward price movement. And the ADX itself is then calculated by smoothing the average between those two indicators. So what you end up with is, if you see this plotted, is often three lines. One is the ADX that tells you the strength of a trend, but it doesn't tell you the direction of a trend. And then the DI plus and DI minus, depending on which one is higher, tells you the direction of the trend, whether or not the trend is downwards or upwards. Okay, so let's look at how we calculate it. So again, as before, I'm going to create a new column in my data frame, just keeps it all nice and tidy and easy to find. I'm going to call it ADX with a time period of 14, so I've just done the underscore 14. And we've got the TA-Lib dot function, but this time we've got the arguments of being the high price, the low price, and the close price. And then we've got the tail period, the time period here. And I'm just printing the tail because it keeps it smaller. So if I press Control and Enter, you can see we've added a new column here, which is called the ADX 14. Okay. And again, we can get the latest value of the ADX 14 as we did before. So this is the index. That's got, well, this will be the value of the latest index. That's the column that we're after, and it's in the ticker prices data frame. So if I press enter, we can see we get 16. So that would indicate that there's not much of a trend going on at the moment. Generally, with the ADX, we tend to think of being above 20. There's different ways of using it, to be fair. Some people just simply look at the value of the ADX. Some strategies will look at whether the ADX is, we'll look at the slope of the ADX as well. But for now, just again, the latest value of the ADX can be calculated using the same format as we have before. So this is just really, I'm just writing down here notes what I've said before. Okay, so the ADX is calculated using these two other values, DI and plus DI and minus DI. So if plus DI is greater than minus DI, we've got an uptrend, and if the minus DI is greater than the plus DI, we've got a downtrend. Okay, so if the ADX is high, and that's the case, you've got a strong uptrend. And if the ADX is high, but minus DI is greater than plus DI. We've got a strong downtrend. So what I'm doing is here, I'm calculating the values for the DI, for the plus DI and the minus DI. So we've got the same format as we've seen before. We are creating a new column in our data frame with the heading DI plus, TA-Lib, then we've got the function plus DI, and then again it needs the high, the low and the close and the time period. And then the minus DI, it's the same format, TA-Lib, minus DI, again high, low and close. And then what I'm doing here is I'm just printing the last two values of those so you can see them. So I held down the shift, pressed return, and you can see got the latest two values there. And equally, actually, let's just, if I just click here, and I'll just show you, if I go up here, and I do ticker prices, and you can see it's getting hard to see it all, but you've got DI plus and DI minus that's added to the end of that data frame. So I'm just going to clear this data frame for now though, so that it gets out of the way. So as I've said before, it's always useful to plot these to see what they look like and get a better understanding of how they work. So what I'm doing here is I'm doing three subplots. One is just showing the close price. The other one has got the ADX indicator on it. And then I've got the DI plus and the DI minus on another one. Okay, so I've just got three subplots there, which if I do shift and return and then scroll down. So, I've added a horizontal line at 25 because that's roughly, there we go. So above 25 is considered to be, a good trend. So what you've got here, you can see the price as it's going up and down. We can see the ADX line, which is the strength of a trend. So you can see, for example, there, that we've got quite a strong trend when it starts off. But we don't know from here whether that trend is going upwards or downwards. This is where we need the DI plus and the DI minus. And we can see that at this point here, it kind of is swapping, okay? And that's why you've got this, it's a slight uptrend, but it's not really much. And it gets to this point, and then actually it starts to go down. Well, at that point there, we've got very much the DI net minus being on top of the DI plus. And then you can see the strength of the trend drops right the way down, so we haven't got much of a trend there. But then at this point here, and we'd need to spread this out first to see the dates properly, but at this point here, you can see we start to get a stronger trend. We can see that the DI plus is on top, and that's roughly around here. That's roughly around where this upward movement is there. And then of course we get here, we can see that there's a bit of a downward trend there, and that then kind of corresponds with this position here. And there's a bit of a trend. It's not super strong, but there's a bit of a trend. Trend strength drops off. You can see it's kind of a bit level for a while. Then it picks up again. Again though, DI negative is on top, and we've got this movement down. So it can be really useful to look at these charts and just understand how the indicators are working. Okay. So moving on to another common one, another one which I came across quite early on. And this is the relative strength index, or generally referred to as the RSI. And this is for gauging momentum, mostly the speed of the price movements. And it ranges from 0 to 100. And generally speaking, people tend to say that if the RSI is above 70, it would suggest that the market is, the phrase, overbought, and that the particular stock may be overvalued and due for a decrease. And then conversely, readings below 30 suggest that it's been oversold and the stock is undervalued and could rebound. Once again, I'd like to say that this is not financial advice. I'm just showing you how to program it. Okay. So, format is the same as before. Let's create a new column in our data frame called RSI 14. So the default time period for the RSI is 14, so I haven't bothered putting it in there. All right, and I'm creating another one, which is the RSI 21, and I put the time period in there. Okay, so we've got the TA-Lib dot, then it's the function RSI. It only needs one argument if you're using the default time period, which is the close price, or two arguments if you want to change the time period. Okay, so holding the shift key, pressing return, and you can see added to all the other things, that all the other indicators, I've got the RSA 14 and the RSI. Sorry, I have to go why I keep saying RSA. RSI 14 and the RSI 21 values are now added to my data frame. And once again, we can plot these. So we've got here two subplots. We're plotting RSI against price. So shift and return. And so here we've got RSI and here we've got the price. So you can see here I've put in the lower threshold as a green line, the upper threshold as a red line. So when it's down here, it would suggest you wanted to buy. When it's up there, it would suggest you wanted to sell. On the face of it, here it doesn't look super great. This is saying you would buy around here and the price kind of tends to go down. And here it's saying you would sell and the price is actually going up, which is exactly the opposite from what you'd expect, really. But that's why these indicators are often used in combination. Okay, last one. This is an overlap because it's doing several things. Okay, so Bollinger Bands again were another indicator that I came across quite early, and it returns different information. So wanted to show you how to look at it, how to use it, and how to plot it. Okay. So the Bollinger Band is going to return. It consists of a line up and above and below price, which is often, well, what I've said here is typically two standard deviations above and below an average. Okay, so so the Bollinger Bands involve an average, 20-day simple moving average, with an upper and lower band made from two standard deviations. Sometimes it's less than that. And the syntax you can see here is upper band, middle band, lower band, and then B bands and the information you need to put in. So the close price, the time period, if you're going to specify it, you can leave it as it is. The standard deviation of the upper band and the standard deviation of the lower band. Okay. So here it is. Okay, so we're going to get the values back as upper, mid, and lower. We've got the library, B bands, and then we've got the close price, two deviations up, two deviations down, and a time period of 20. We'll press shift and return. That calculates it. And then we're going to plot it to see what it looks like. Okay, so you can see, it's not terribly easy to see, but you can see the lower one is down here. You can see the upper one is up here, and you can see this midline is the red line in between. And there are various different ways that people use this indicator, and we'll get onto that in another video. Okay, so what I've done here is just so that we can zoom in. I've just looked at the last 60 days. so that you can see a bit clearer. Here's the price, the green line. Here's here's the midline, and here's the upper band and the lower band. And so you can see how the price is moving around and how it affects those bands. And as I say, people use them in different ways to indicate a strategy. Okay, so thank you for watching. Please remember to like and subscribe to the video so that you get updates of new videos as they come out. And in the next video, what we're going to be doing is looking at how to use those technical indicators to create a trading signal and backtest a strategy. So going back up to, for example, the RSI, nice and easy. How much money would we make if we bought when it crossed the RSI 30 and sold when it hit the this RSI of 70? Okay, so thank you for watching, and I will see you next time.